Good evening, everybody, and welcome to another edition of Live Market Analysis. It is such a pleasure to be with you on Monday evenings at a wonderful 7 o'clock my time, and probably a pretty horrible 10 o'clock where you are. But hey, we've got people in New Zealand tuning in. God knows, I don't even want to think about what the time is over there. Wherever you are, welcome. And wherever you are, of course, don't forget that the disclaimer says that everything we're going to talk about tonight is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. It doesn't know what you want to do. So you need to figure out what you want to do and how you're going to use the information. Consider it very carefully or seek the help of a financial professional before you act upon any of it. The other thing that's really important to remember, and it's not in the official disclaimers, lots of disclaimers out there, you've heard them all over the place, all over the internet, but this is the unofficial bit, which says that, hey, trading is risky, investing is risky, you're going to lose money at some stage. That's part and parcel of what we're doing here. My job is to help you lose less of it, less often, which means make more of it more often, hopefully. But, you know, it is risky, and you have to understand everything you do is a result of what you do, not me. With that in mind, it's your job this evening to send me your requests. I'm going to look at the charts of anything you want to do in terms of stocks, commodities, bonds, crypto, indices, and the like, or it could be anything to do with trading, the 3Ms, methodology, money management, or mindset. And hopefully the other part of your job is to learn as much as possible and ask questions if there's something you want to know more about. Let us head over to the AMI Broker screen, which is where we always start, because we like to do our portfolio management at the beginning of life market analysis to determine how much we should have at risk. It's this overarching risk management strategy, because we have, you know, there's two levels. There's risk per share, and then there's how much of your capital you're risking, okay? This is the how much of the capital you're risking. At the moment on the Nasdaq, I think this is looking pretty good here. We're double green, that's the first bit. So we've got a short-term uptrend and a long-term uptrend. The price action is moving back to higher peaks and higher troughs through here, albeit within a broader consolidation pattern. So we shouldn't forget that we are equilibrium. Okay, short-term we're equilibrium, long-term it's still demand side. But we're improving within that equilibrium market, potentially into short-term control as well. The candles would suggest to me, I mean, look how many white candles we've got here over the last few weeks, and particularly in this last price action move. I think we're looking demand side, or can I say I'm preempting a short-term demand side market to occur, and it'll be confirmed when we close above 22.05. The point of all of this is, what do you reckon? I think we can go full risk position here. I know it's preempting the breakout, but I can't see any reason not to. We were at 2/3. I don't mind if you've got some capital out there and you feel comfortable with the setups that you see. I think we're okay to move to FRP on this one. It's not a huge switch, is it, from the mindset I think that we've had over the last few weeks. A few people doing thumbs up as well, so they are thinking this along the same lines. Let's pull it back to Australia, where we were already full risk positions. It's quite rare in my experience for the Australian market to be at a higher risk setting than the US. Normally they're doing wonderful things and we're just in the doldrums. We did actually tickle new highs, and I say tickle because you can see here on Thursday we had a little look, didn't we? We just poked our head out there at new highs, had a look around and thought, no, it's not really for me, and back we pulled by the end of the session. Friday we went a little bit further out of the hole, didn't we? Just had a look around, I'm not so sure, and back we went. But it was Friday, to be fair. Don't expect much from the Australian market on a Friday. Today was the opposite. Today was exactly, look, Thursday, Friday didn't surprise me, but a little bit disappointing. Today's price action doesn't surprise me at all. It's the least surprising out of the three candles, but it's also very reassuring because it tells me that as much trepidation as there is up there around new highs, we have to do things slowly here in Australia. We've got to be sure about ourselves. There's still plenty of demand in the system. That's that downward pointing shadow. And yes, we're still very much a short-term uptrend here and long-term uptrend here after just a couple of things. But in a nutshell, there's nothing I can see here that would suggest that we don't proceed with an FRP. Now, let's try and convince ourselves otherwise. Are there any red herrings out there? Well, we're not going to get it from the Nasdaq 100, which is a narrower version of the composite. The Dow Jones, well, I don't really care about the Dow Jones. It's the 30 biggest stocks in the US, so they're not really telling us what the broad market is doing. Russell 2000, That does tell us what the broad market's doing, because number one, we're talking about smaller capitalisation stocks that are at the real heart of corporate America. It's very broad, 2,000 stocks as well, and it's a very sort of egalitarian index in that the top 10, sort of even 20 stocks don't have as much of an impact as, say, the top 10 or 20 stocks in the S&P 500 and the Nasdaq. Unfortunately, though, this one doesn't look as good as the composite, doesn't look as good as the XJO, and it looks a bit disappointing that this isn't pushing to new highs. But I think we'll have greater confidence in that full risk position. I think we're far more turbocharged, for want of a better phrase. But is this a red flag? Is this telling us not to proceed with our original thesis? And I don't think it is, but it's something I do think we want to keep an eye on, because we were short-term downtrend here. The price action is not great, and the candles are a little bit more wobbly. All US indices. Isn't that fascinating? All US indices, but how different do they look? And that's why we look at them. I don't care about the S&P 500. It's the least interesting, least indicative index out of all of the main ones. And guess which ones you read about in the AFR and on the internet, the S&P 500 for some reason. Mid-cap, I think there's something interesting there. And look at that, a bit more like the Russell rather than our composite. Don't forget our composite. Nasdaq composite is still dominated by those bigger capitalisation stocks. I haven't looked at the VIX for ages. I haven't looked at the VIX forever. And so we probably should pay a little bit more attention to this one. Obviously, this is called the fear gauge. So when this is heading up, it indicates heightened tensions among investors. That's the waffle part of it. The real part of it is it's talking about index options on the S&P 500 and the premiums that this is implying. Obviously, the higher the premiums, the more volatility. That's just basic maths when it comes to the old Black-Scholes options pricing formula. Anybody do that? All the way back at university, I did derivatives 325 at University of Western Australia. I aced that thing, of course, way ahead. When I did that, the young 20-somethings around me all doing derivatives 325, I was turning over hundreds and hundreds of thousands of dollars of options trades every day when I started doing that course. So it wasn't a problem for me. But that's not an issue there. We're going back a few decades here. CAC, back when there were market makers, there were actual market makers in the options market. And you can ask for a firm price. Does anybody remember that? Give me a thumbs up if you remember asking for a firm price on options contracts, where they had to give you a firm quantity and a price, and you had a fixed, it might have been 10 or 20 seconds to deal at that price and quantity, and they couldn't do anything once they gave you that price. They could make it awful, but they still couldn't do anything, and that allowed you to pick them off unscrupulously, to the point where many of them would call my broker asking to reverse trades, saying it's unfair what he just did to us. I think I was 19 at the time. Let's go back to what we were supposed to be talking about, which is the French market. And Europe is looking incredible at this point in time. And, you just really can't fault this. Why is Europe so good? I thought, it's supposed to make America great again. FTSE looking pretty good, and the IBEX is good. I'm looking for red flags. I can't see any. Let's keep going because I've talked too long already. They're not red flags. Nikkei, Nifty 50 over there in India. And that's actually the opposite of a red flag. It's a green flag. That's a good sign that the SSEC Shanghai Composite is heading up, and even better that the A50 shares over there in China heading up. We've obviously looked at that one. Let's have a quick look through the indices. Where do you want to park your cash within the Aussie market? Certainly discretionary shares look amazing at this point in time. The exact opposite is energy shares. Oh, take a deep breath and just feel the relief washing over you that you don't own any energy shares. You sold them months ago when you first started listening to me. And, how good is life? Not owning any of that crap. But you probably own some banks and maybe a little bit concerned about those. We'll talk about some of those tonight. You got plenty of gold, and that was disappointing today, wasn't it? Again, we'll talk about that tonight. Healthcare, probably don't have any of those. You certainly don't have any CSL shares based on my watch. But that is mainly the CSL and the Cochlear Index there, and that has broken down, disturbing. Technology still fine, no problems. Heading to materials, we talked about this last week. It was kind of 50-50 on the border. That's actually starting to look half decent. I'm seeing things like Deterra Royalties coming up as a turnaround play. So what does that tell you about the resources sector more broadly? That's an iron ore company, and that's the other resources. Property actually looks good. I'm noticing a far greater number of property companies coming up on my scans. So if you see them, the sector is starting to move. consumer staples, mainly coals. That's certainly on my feature list. Telecommunications is fine. Utilities is neither here nor there. Let us keep moving. We're going to look at base metals. There's some interesting moves in base metals this week. Certainly worth talking about. Let me change to a line chart just a little bit easier for you to see. That's aluminium, and aluminium is nudging towards a breakout here. So, 18-month breakout. I don't know how long. If I click that, I'll find out how long. A couple of years. So, sort of a 2-year breakout. This obviously was post-COVID, supply chain shortages, and then exacerbated by Russia's invasion of Ukraine. That was the big spike here. And then, the cycle. The cycle kicked in. We come back down. China's economy is not growing as fast as we thought. Supply chain shortages unwind. There's more supply. Prices come down. But the cycle is turning again. So commodities, you've heard me write about this so many times on Market Index. It's all about cycles, and that is looking like it's turning back up. Copper, let's stay on the weekly charts. Why not? I think that looks like a very interesting chart, doesn't it? That is rebounded off that long-term uptrend ribbon. You would have seen me write articles in ChartWatch in the evening wraps about this as well. Iron ore, I think, is looking better. It's not showing there, but on the daily chart, it is picking up. Nickel, it's just a wall of supply of nickel from Indonesia at the moment. So a very different sort of set of demand supply dynamics there. Lead in the doldrums, but I don't think that's going to keep anybody awake at night. Tin, I think, is a really interesting one. That's certainly also bounced off its long-term uptrend ribbon like copper. But when we look on the daily chart, we can see that it actually has moved quite sharply higher over the last few weeks. I think that looks pretty good. And there is some MLX is a nickel stock that we'll be talking about later on tonight. It's in one of the offline requests. And zinc is somewhere in between, isn't it? Lithium carbonate prices still bumping around the bottom, but I do note that spodumene concentrate 6%. This is the Platts S&P global price. It's in a short-term uptrend. How about that? I don't hate lithium. It wouldn't bother me if this was the beginning of the next bull market. I'd be quite happy about that. We will see it. We will see it in charts like this, but I think it's still very, very early to call that sort of thing. Let us head over to the TradingView screen. That's where we're going. And look, that's not where we're going. That's you lot. Okay, I don't want to see you lot as much as you're all wonderful people. So I'm going to maybe turn you off and then try again. This does happen, doesn't it? Actually, I think I have to go there and then I have to change the input. This was all working, I promise you, before the start, and then I had to restart. I had to restart OBS, didn't I? And then it stopped working. And there we go. I found it. Okay. We are going to go to here. There we go. TradingView coming up. It doesn't look right. It should be 10-year government bonds, and I'm still looking at Amy Broker. It just means I'm on the wrong screen. Try again, Carl. You want the 10-year bonds. Where are they? That's where they are. Now I'm on the right screen. Hey, we've got sound. That's the trade-off. If you're watching the recording, had some sound issues at the start, had to restart OBS, which meant that the selected Chrome output was reset. US government bonds, this is where we need to start because we always start at the price of money. The price of money is represented on screen. More importantly, the price of risk-free money. It just makes total sense to me that the price of risk-free money should set the price of all other assets on the planet, and US government bonds are considered to be risk-free. So if you can invest risk-free, I keep saying those words because investing is all about uncertainty. Well, this is the opposite of uncertainty. This is certainty here. Uncle Sam always pays his bills, at least as long as I can remember. Can anybody remember otherwise? And we have ultimate faith, President Trump notwithstanding, that will continue to be the case for many, many years to come. He did sack the people with their fingers on the nuclear button, didn't he? You never know. But assuming that nothing bad happens, that's the price of risk-free money. So if you can invest here risk-free, well, then what does it say about everywhere else you might be investing? If you can't get as good a return here, then maybe, or yields here get better, then relatively speaking, yields everywhere else must be worse, and vice versa. The good news is black candles, yields coming down means it's easier. It makes it easier for fund managers to bid up the price of risky assets. That's the crux of it. Lower risk-free yields makes it easier for fund managers to bid up the price of risky assets like stocks. So last 2 days down, that's pretty good. We had some, I looked at the inflation data and I didn't see much good in it, but the rhetoric is that there were a few bits and pieces in there under the surface maybe that were heading in the right direction. Okay, I'll take the market's word for it. Doesn't matter what I think. The yields came down. Aussie yields popped up a little bit today. I can't think why. I don't know. Aussie dollar bounced maybe, and a bit of money came back in there perhaps. But otherwise, no red flags there. I need to get a move on. We have talked about Chinese markets, no red flags. We've talked about Europe. I think we're good. Let's quickly head over to the remainder of our futures chat here, which is silver looking okay. You can see this huge upward pointing shadow tells you that there's plenty of supply still in silver. It's not gold. Okay, it's very much second, no pun intended. And you shouldn't expect the most amazing things for silver because I just can't see it in that price action. It's ultimately vibrating in a very gently upward trading range. Gold, on the other hand, does have some spunk about it, but Friday's candle, okay, this is the current candle, it's live, we discount it, doesn't exist, don't pay any attention to it. Friday's candle does show some supply coming to the market. It could be as innocuous as something like this, you know, very shallow pullback, short-term uptrend ribbon doing its job and heading back up again. You know, obviously it come down eventually, but when that supply is found, you know, it can set off a prolonged period of equilibrium. What does the supply mean? The supply, we've been in a demand side market. Demand exceeds supply. We found some supply. Now that supply could be as innocuous as pausing the trend for a little while, you know, excess demand, bit of supply. Now we've got equilibrium. Equilibrium means prices go sideways, or it could be the beginning of the whole end, and we don't know. It could be something more sinister like this. But when you see that candle, it means, look, take a little bit of pause and let's see some confirmation. If we get confirmation of the uptrend, that is a bunch of white candles, forget about it. It's just a little bit of a pullback for whatever reason. You know, maybe some data was data related. I don't know. It was interesting to see yields coming down and this coming down. That doesn't really connect, but it happens. That's confirmation of demand. Confirmation of supply would be another upward pointing shadow, another black candle, a lower peak, and that is giving us greater evidence that we are seeing equilibrium coming to the market. So it's piece by piece, candle by candle. I always say the market is talking to you, always talking to you. Every candle, it says something else, like another syllable or another word, and it's telling you what it wants to do or what it's done, but then we interpret what it wants to do. You get what I mean? You've got to listen though. You've got to listen. You've got to tune your ears in. Copper, disappointing on Friday. A few of these turned around. I don't know what it was. Iron ore, as I said, improving. It's still improving. I think that's right. Uranium is just unwinding, completely unwinding. Yeah, this is spot. I know people say, oh, this is a term price. The term price is more important. But ultimately, eventually, the spot price does impact the term price because it impacts the lower end of the term range. And it's you can't completely ignore it. And if we just put the line chart on there, so it's easy to see. Down she goes. A classic commodity cycle trend reversal. And that's why I'm so damn good at calling them, ladies and gentlemen. And I've called the last however many, you name them, every commodity for the last 2 or 3 years since I've had a bit of a break from the industry. From 2015 to 2020, came back with thin markets, and I just keep calling these, and my system is impeccable in that regard. Hey, it's your system now, so that's good news too. But I'm not doing anything really unusual there. It's just supply and demand. Always focus on the purest form of technical analysis. Crude, not doing a whole lot. Let's have a look at coal, just continuing to plummet there. So all the people that just, coal stocks, great dividends, okay, yeah, in the past, in the future, don't know. Anyway, let's keep moving. Let's get to your offline requests. And we've got a few here, so let's pick up the pace and head back to here and going to go here. And let's go zoom, normal, and kick off with, not that one. Let's go candlesticks. Well, it's not terrible. Astral Resources, but MLX for Roscoe. And Roscoe says that he took a third off the table at this major point of supply. And I can certainly see what he was looking at there because 1, 2, 3 points really. Let's extend that across. And I think I don't think we need to bring it down, but he said, 49.5 cents, 50 cents was playing on his mind, major points of supply. Look, I don't know which candle you did it on. I mean, if you did it after that candle, did that hit 49.5? It kind of did. I mean, that's the only candle that I could even vaguely, maybe that one in advance, in anticipation. But if you didn't do it on those two candles, Ross, I struggle to see why you would have done it on that one, because we're higher peaks, we're building into it. You can't do it intraday, so you can't say, Carl, I tuned in at lunchtime, it was up there, I sold. That's not how we do things. We wait to the end of the day, wait for the final, flourish of demand to hit the market and supply to leave the market. And we got just the most wonderful candle there pushing into that supply zone, which just tells us, this time we're probably going to get through, or this time there's a higher probability we'll get through. So I don't agree with it. The other thing I don't agree with is 50 cents as a round number. I think if you've never been to 50 cents in the past, like here, then it's important. But if you've been there 1, nearly 2, nearly 3, 4, 5, 6, seventh time is, I think we're pretty much comfortable that 50 cents is not a big deal here. So I'm not sure I would have done. I'm sure I wouldn't have done it. That's what I need to say. But hey, if you did it, that's okay too, right? We just get on with the job and say, well, what do we do now? What do we do now? Well, all I can see is demand. It's a wall of demand. I've got some good price action, some great candles. We've pushed through. Ironically, we've pushed through the big supply zone. It's not a big issue. That latent supply is gone, and we're now that supply's out of the market. Think about. I just want you to think about this for a second. How much supply was here? Question mark. Question mark. I'm going to put to you lots. Seriously, lots was here. Okay. Now, what is supply? Supply is shares, right? Supply equals shares. And what does supply want? What does supply want? All right, question mark, question mark. Well, the supply wants cash, right? Supply wants cash. Now, all of that supply, what have they got now? They're out of the market. So all of that supply is now cash. It's cash. Well, how do we create demand? What is demand created from? Demand is created from cash. Well, it equals cash, doesn't it? And the best kind of demand is motivated demand. Demand that knows the story, right? That knows all the good stuff about the company. Do you know how I know that all that supply knew the good stuff about this company? Because they bought it. They thought they were going to get $1. It didn't turn out that way, but they know the good stuff about it. And what is that supply thinking now? Right? It's thinking, oh shit, I shouldn't have sold that thing. I shouldn't have sold like metals. All the good stuff about it, it's got to come true. And all that cash that's out in the market from that supply, we call that latent demand now, right? And that latent demand is the whole reason why things break out. You go buy a technical analysis book, and the good news is you don't have to buy them anymore. You can download them for free off the internet. But they'll tell you, look, buy stocks on breakouts. But they never actually explain to you what the hell a breakout actually is and why it occurs. The anatomy, it comes down to demand supply. So you've got a bunch of motivated, or at least educated, latent demand in the system. And we know we've cleared that supply. The supply's gone. The other wonderful thing about this is you think about, we've got a lot of new blood in the system here, right? They're coming into the market. They didn't know about MLX down here. And here and here and here. They didn't know about it. They come into it here, and for them, 50 cents is normal. For the people where all these arrows are drawn, 50 cents was something wonderful and amazing, and something to be optimistic about, or think, to pray for. Oh God, please, if you let Metals X go to 50 cents, I'll be the happiest person in the world. I'll cash in all my chips. The people getting in now, they're not thinking 50 cents is anything unusual. 50 cents is the base now. 50% is the base pattern where they're getting in. They're getting in here. What are they thinking? What number do they want to get for their MLX shares? Type it in, everybody. Tell me. The people buying now, they're not thinking they want to be out at 50 cents. Where do they want to get out? If you buy something at 50 cents, where do you want to get out? Who's typed in 1? He just typed in 1. That's all he needs to type in. Okay, so what does that mean in terms of demand? No, we've got demand. What does it mean in terms of supply or latent supply? Where is the latent supply? And now, please don't let this have anything in the history of it does. Crap. I was hoping this was blue sky and then it would make the argument easier. Doesn't matter. We'll keep that there. It still matters. 75 cents. Maybe not one now. Matthew's saying $1. And both boys now looking at that, and this is what we do, is that we zoom out to our weekly chart and we go, okay, well, is there anything that I need to know about out there? Now, it's not that long ago, 2022. What happened in 2022, everybody? We did it in the introduction. What happened to base metals prices? You don't have to type this in, you already know, of course. And that was the last time Metals X did this. And we saw that many of these base metals prices in that cycle potentially are turning up. Aluminium looks the best. Tin, it's still a long way behind. But we can imagine, can't we? So people now, that latent supply is at 75. That latent supply is at $1, right? So we're in an environment where we've got, isn't this wonderful? All this latent demand in the system from all that supply which just got cleaned out is now in cash. And that's the demand side. The supply side that is really not wanting to sell for a bit higher up. Now, if the stock is good, we're in an environment of excess demand well, excess demand implies more demand than supply. But if it's good enough, it'll get there, right? That's the thing. Like if there's still that desire and the valuations are up there, it'll get there. If it's not, it won't. But it has more chance to do it now. And this is the whole psychology of breakouts and why this whole theory that you do read in the technical analysis books about buying breakouts does work, okay? But not every breakout works. That's what they need to tell you in the textbooks as well. If you take 10, maybe 6 of them will probably work, and that's fine. If you make $1.50 on the 6 winners and only lose 50 cents on the 6 losers, you're $6 ahead, right? And that's how we think as traders. We don't think, I have to win on this trade. We don't have to win on this trade. We don't have to win in the next trade, but over 100 trades, we'd like to win more than we are inevitably going to lose. That's the other thing they don't tell you in those technical analysis textbooks. Maybe we spent a little bit too long on that because I can see it's 7:28, but maybe also we didn't. Let's go to the next one, which is from Mick, SKS. Mick's saying he's getting a little bit bored of SKS, so he's losing his patience. And I can see why. Yeah, look, it's flattening out. And I don't mind this idea of getting a bit bored and going and chasing shiny new things. And I think in life, our parents tell us that's a bad, don't go chasing that shiny new thing, okay? I certainly tell that to my kids. Stay the course and stick it out. Well, we don't have to do that with our shares. If something looks better, it's shinier and it's newer, dump this thing and jump on that one. I always say, for me, trading is like being in the Melbourne Cup, and there's no jockeys. There's just horses running as fast as they can, and some are going to get tired and they're going to slow down. Some are going to go a bit faster, and you're the only jockey in the race. And your job is just to be on that fastest horse. So you're just going to get jumping around from horse to horse and just getting that horse that's just hitting its straps. And if this one's not hitting its straps right now, we don't feel bad about getting rid of it and going and getting something else. And you can always come back to it because the candles will turn white, the price action will turn better. You might miss a bit, you might end up buying it back at 230, but really, who cares? Between 205 and 230, if it's going to go to $3, who cares? If it's the horse that's winning the race at that time, we'll jump back on it. Now, having said that, you should have a good reason. We shouldn't just on a whim just jump out. And we're looking for this changing of the demand-supply equilibrium, aren't we? So we're going from demand-side market into an equilibrium market. We doesn't need to be supply-side market, but at least an equilibrium market. And this is very much equilibrium. How do I know? Well, you look at the trend ribbon. Trend ribbon's doing its job. It's telling you, hey, I'm neutral. Look at me, I'm orange. That means we're in equilibrium, okay? It flattened out. It went sideways, it flashed a little orange, and then it went back to green, as it often does. You'll see this. It'll do a bit of orange, and it'll go back to green, orange. Okay, so anyway, it's orange, it's flattened out, maybe it's even turning down. The price action is nowhere, and the candles are, like a zebra, right? So I don't mind. I think we had a minus a third. It doesn't matter what we said in the past. Let's talk about now. So let's just move this over here. And on today's candle, if you wanted to knock a third off tomorrow morning, let's forget we've done anything on it. There are signals there to not be full risk position at this stage. Let's go minus a third on that candle at the very, very least. And if you were to go 2/3 on that, I wouldn't mind. Is there any point keeping a third in the market on this one? Look, personal preference, I don't mind. There's still a long-term uptrend, okay? And if you keep keep a sixth. If you're just keeping little positions here and there, if you're on a very low brokerage plan, and some brokers, for small amounts, don't even charge you brokerage. So if you're in that sort of environment, there's no harm in keeping little bits in there, and using maybe your long-term uptrend ribbon as your trailing stop, okay? So yes, I agree with you, Mick. If you're getting bored with that one, no problems. mix. Next one also happens to be MLX. We've discussed that enough. Let's go to AVH as a potential turnaround play, but I think we're a little bit early. This was one which was in the list, the uptrends list out here, and it was looking very good. Even there it was still okay, even there it's still okay, even there it's okay, even there it's fine, we're pretty happy, and then it had some news. I can't remember what the news was. Clearly it wasn't well received by the market, and I'm sorry, but that is going to happen to you. You have to expect that this is going to happen, and then all we have to do now is just, guess what, apply the system, isn't it? Like, it doesn't matter. Black candle, white candle, up, down, gap. It's, what do I do, Carl? Okay, just apply the bloody system and move on. And I know some things are going to hurt, but it's our job to make the most of the good things as well, so that we can afford to take these inevitable, oh shit. And look, if you saw that at the end of the day, there's nothing you could have done, but there is something, therefore, to be said about tuning in that last 10 or 15 minutes and just checking your positions. If you don't have to check the whole market and do new scans and get into trades, but at least checking the trades that you do have. So if you see that, we know that's a species ending event. We know that gap and that size candle and that low close through all the demand points, like this one here, we know that. There's no, do not pass go, do not collect $200. We know we must get out. But then if you waited to the next day, you're getting a substantially worse price again compared to, say, tuning in just before the market closes. You're not allowed to tune in any more than, say, 15 minutes because you're going to do silly things, but just checking your open trades and seeing if there's anything you need to act upon. If you've got more time, maybe you can start to extrapolate that out to tuning in around about an hour, and then if you've got a trading platform that allows you to do this scanning on that 3 o'clock candle, I happen to have one that does it, and then setting up your trades for the next day, you can do that also by the end of the day. But starting to get a little bit more sophisticated and more expert in being able to run scans in a timely fashion. But that is history, but certainly a worthwhile case study to review in terms of, well, stuff's going to go wrong, how do we deal with it? There's no point looking at these because our job is to be out by now. They're completely irrelevant. Lo and behold, eventually it makes a double bottom there, starts to turn around, so I'm guessing at some stage because it's heading back up now. Here it is here. A couple of gaps. I think there was some other news. Okay, don't quote me, but I'm pretty sure there is. And that's why we're back up here. Is it a turnaround play? No, it's not. I've got double pinks. I need to see amber on the long term at least, and preferably green. In fact, I really do need to see light green. So no, Mick, I can't see that this is a turnaround play yet. It needs to get above the long-term trend ribbon, do a little dink, and then head back up. And by then, maybe the short-term trend has turned, but it's not there yet. Hey, if this thing is trading at 450 next week, you're going to say, Carl, you got that wrong. And I say, well, I didn't get it wrong. I just couldn't tell the future. All I could do was apply my system as I know it, and it meant I couldn't buy it. So there. And that's the way you've got to think about it. There's no, oh, geez, I got that wrong, I should have done that. There's no, it's, did I apply my system? Yes, okay, well then get on with your life. Did I not apply my system? Did I go at odds with my system? Okay, well then you need to be upset with yourself. Not the market. There's no point being upset with the market. In neither case are you allowed to be upset with the market. What is the point of getting upset with Avita Medical? Should I write Avita Medical an email saying, Dear Sir / Madam, your share price was at 3.30 and the long-term trend ribbon was not in the correct position for me to enter as per my system, so I didn't. I'm very annoyed, ... Yours truly. There's no point getting upset with the market. Get upset with yourself for not following the system. And then at the same time, give yourself a pat on the back for doing so. Mick's asking about tin, which we did look at, and tin is starting to move up. Let's go to Brendan. Brendan's got ACL, which looks good. No complaints here. He did note it has been coming up in the watch list recently, and maybe even as recently as there, it would have come up because I certainly like that candle. For me, that's a plus 1/3. Today's candle is neither here nor there. If I didn't have risk, I wouldn't be adding risk tomorrow on the basis of that candle, but certainly next high close. So let's go just literally write that. So NHC, next high close, doesn't stand for New Hope Corporation, but I would be allowed to go plus 1/3. Why? Because I've got double greens. I've got, I was going to say rising peaks and troughs. I don't have rising peaks and troughs. So not a deal breaker, but it is a comparison tool. So what do I mean by I don't have rising peaks and troughs? Well, look, I actually have falling peaks and troughs at this stage. Maybe that one's just becoming rising again. I can't tell unless I zoom in, and I'm not going to, right? But let's assume that it's falling peaks and troughs. Is it a deal breaker? Well, we're trying to get scores out of 10, aren't we? So we might find something that is as close to its high as this one, which is a big tick for me. I love things that are punching, towards their highs. Got good trends, predominance of white candles. Absolutely, yes. I can't see the volume; it's all skewed by this. But if I zoom in, I'd like to see, a little bit of a push in volume into that supply zone. I don't mind it coming off here as we're sort of pausing. So yeah, look, everything is looking good apart from just the price action. But this is now the ability to then compare and contrast different setups. If I find something that's got all these other things and good price action, well, I'm going to take that ahead of this one. But looking at this in isolation, next high close, I'm happy to do a third because everything else is in place. Everything else but the price action. And all that's doing is bringing it down maybe a point on the score out of 10. Let's go to Westpac. We're going to lose some points out of 10 here. It was a great trend. Certainly, I would have run it as a... did I run it as a feature there? I can't remember. Certainly there. So you can see how recently this was ticking all my boxes. But we had a news event today, and we don't know what the market, or how far off the market was in its expectations to what the reality of what the stock is able to produce. We can't blame Westpac. Westpac delivered its results. We can blame, I guess, analysts for expecting too much of those results, but even that's kind of a pointless exercise. A picture of excess demand here. I absolutely want to have risk on this one, and we can't see, unfortunately, what's going to happen when news breaks. But we can respond to it, and that's all we can do here. And look, today's not the species-ending event, as was the case with AVH. Certainly not a good candle, because if you fill this bit in here, the gap, you fill it in black, it's still a sizable black candle, but it does have going for it that downward pointing shadow, which suggests to me that investors were out there buying the dip. I don't think I'm going to look. Let me think about this, and all I'm thinking about is whether I'm doing minus 130, and this is all we're talking about here. Okay, that's the extent of it. So we probably shouldn't stress out too much about it, because that's all we do. We're still 2/3 here. But what I was going to say is, look, certainly now this is a key point for me, that the price should not close beneath that shadow. There was a substantial amount of cash, of latent demand that took on the risk of Westpac today at the lows in light of those worse than expected results. Let me say that again. That candle at some stage was a big black candle. There was a great deal of panic, of concern about the results. How do I know? Well, if the price gapped down, that's a pretty good sign. And we were trading at the low of the session on quite a big decline. Okay, that's where we were. But the cash came in, and a lot of cash came in. How do I know? Because we did double Westpac's average volume today. So there had to have been a lot of cash out there. Yes, there was a lot of supply, because remember, volume is buying and selling. But there was a bit of demand that came in, and it started to buy and it started to buy. We got to there, okay, by the end of it. Could have been better, could have closed with a white body, could have closed further into the gap, okay? The question is whether doing a third today, or we're going to do, for example, that won't stay a third now. Down there, I think at the least you would do 2/3, because if we get down here, all of that demand, which we saw come into the market today, we saw that with our own eyes. If you know how to remember, the market's always talking to you. So it told you what happened today. What incredible detail. You cannot tune into any media outlet on the planet and that media outlet tell you what I just told you. Okay? That's how much information you're getting out of that blue line and that black box and a line. Isn't that amazing? So that demand, if we get beneath this arrow here that I've drawn this way, this horizontal arrow, think about it. That demand must be out of the system. Like, it must have been consumed by the supply side. Remember, demand is cash. I shouldn't say remember. Never forget, demand is cash. And if we trade beneath the low of that downward pointing shadow, we have that. So the supply has consumed that cash. And then where are we? Like, how do you feel about things? That great shelter, that great confidence that we were drawing from that level, that protection that we felt from the demand backing us up at that level, where is it? It's gone. And therefore we must act, I feel. I can't say things like must have, be careful what I say from licensing perspective, but if we get down there, I think we're at least 2/3, and if you want to do 3/3, I wouldn't mind. But the real question is, well, what is now? What do we do now? Do we act upon that candle because there is a gap here? And do we knock a third off the table, or do we give it the benefit of the doubt? And I'm not going to tell you, isn't it? That's a personal preference. But at least it's my job to give you the options that are sensible and based upon stuff we know. And then I guess it's your job to act upon those options, whatever feels more comfortable to you. Because you have to be comfortable with your decisions as well. If you're stressing about your decisions, you're not going to make good decisions. Let's go, but a wonderful case study. Thank you, Brendan. Let's go to Dave. Dave's got FID. Sorry for all the people with online requests. There are lots of offline requests this week, but I think we're getting some good case studies out of them, and I will ensure that everybody gets their questions answered. Dave saying this is a new addition. He's on his scan. He said it's quite illiquid, but hey, you can't argue with that candle. And it's closed at $10. Didn't it? Like $10 was not an issue here. And it's the first time we've been there. So I agree with you. If we go to today's shortlist, I know this was definitely. Did I not? No, I thought I ran that as a feature today, and I didn't. It seems, but I definitely saw it. Let me run. This is going to. Oh no, I don't have to do that. I can go here because I've got. I have done something even more wonderful for all of you. Is put the shortlist here into Trading View, and you can just access it anytime you want and just scroll through the list. But there it is there. Okay. Well, now I'm asking myself why I didn't run it as a feature chart, and maybe it was the liquidity. It was just this concern that, if I put it as a feature and then everybody reads the article and they all run and buy it, we could get some artificial price action or create artificial demand in the market. I think that was probably it. But I still think it looks very good. Yeah, so no complaints for me. I don't mind telling you lot number in the dozens, not the thousands. There are literally up to 5,000 people a day that read those market index chart watch scans. So I do have to be careful about the liquidity of the stocks I put in those lists. But let's go back here. And I was also about to run the scan again to confirm it for me. I don't need to now. I can go back here and go back here and go FID and say that plus 1/3. Let's go FRP if you got it, of course, and plus 1/3 if you don't. Let's keep moving to A2 Milk, which I don't know if you saw in that shortlist was there, and if you saw on the feature chart list, it was also there. And much like Westpac, that down gap was supply. It was, you fill it in black. We need to fill this in white, and that's an almighty white candle on, almost the highest volume for the last couple of years. So I have to add risk to it. You can do whatever you want. I do have some concerns about this. So it might take some time, and that's the only thing. It might be better waiting for this area to be dealt with accordingly, and it might be just you might end up paying a little bit more, but there might be a little dink here, a little pullback, a nice downward pointing shadow, and that's maybe where you think you're going to get it, because if it breaks through here, it could go much higher. So look, I don't mind. We're only talking about adding a third, aren't we? So I've actually probably overcomplicated it. Let's just do that, plus 1/3 FRP if you've got it. It was shaping, it was coming up in the scans, but tight price action. I just didn't feel that it had the goods, and proved me wrong today. But it took some news to make it happen. Obviously FRP on that one as well. Let's go to SM1, which looks fantastic sub, or Synlait Milk. It's another milk company. Hasn't been coming up on my scans. I'm thinking it's because of the liquidity filter. If it had come up on the scans, or if it had met the liquidity filter, I should say, absolutely it would have been in on this day, and on this day is a turnaround play, and that's ancient history. But I guess you guys can sort of do scans as well, and not use the liquidity filter because you're only little, so it doesn't matter. But yeah, that looks fine to me. So FRP, I don't think I'm adding a third today, just a little bit of an upper shadow, maybe proximity to $1. Oh, look, I don't think it matters. I'm picking Nitpicking here, plus 1/3. Happy with that one as well for you there, Dave. You got a few here, so I'll do them quickly. That potentially is a turnaround play. I think I'd need to see dink first. It's still too early for me. But yes, it's starting to firm in that direction. I don't mind it. It didn't make the list today. I don't think it's ready. It's certainly not a feature. But I can see where you're coming from. Tyro, I cannot see where you're coming from by labelling this a turnaround play. It is not. I can still see a bleeding, great, big, long-term downtrend. Has it got a few white candles? Yep. Has it got maybe upward price action? If I squint, it probably does. Is it a turnaround play? No, it's not. It's still too early for that. Is it an aggressive setup? No, I don't think it is either. There's just no real base pattern, so to speak. So I would wait for this to be an official turnaround play, and that is pushing above the long-term trend ribbon, dinking there at the very least, the ribbon turning orange, short-term uptrend is in place, nice candles, nice price action, and paying more for it for the confidence, the extra reassurance that it is actually turning the trend. Because why can't this? And you say, oh, Carl, why do you have to be so pedantic? It's going to go up. Trust me, it's Tyro, it's a good company. Okay, well, you probably thought it was a turnaround play there as well, and there, and there, and there, and there, and I have rules, I'm sorry. Let's go to Rebecca, who's got P&R, which I don't know if you saw before. Rebecca, there you go, is a feature chart, so that is highest conviction for me. I can't see any reason why you wouldn't have risk on this one. The only thing that might hold me back, and this is a personal preference thing, is you can see the way it moves. It's a little bit choppy, it's a little bit, the candles are a little bit, line-ish, if that's the word. There's a lot of paper out there. So that happens when there are zillions and zillions and zillions and zillions of shares, okay? Because the company's been around forever, Pantoro. And what these companies are excellent at doing is not mining wonderful minerals from the ground, but what they're good at doing is mining shareholders' pockets. Over many years, they run out of cash, they issue more shares, okay? The directors, they have wonderful lunches, they have great Christmas parties and, gatherings, and they go on trips to the site and, maybe trips to different parts of the world to investigate other mining practices. And then they run out of cash. Okay, I should say they do a bit of exploration in the meantime. And then they run out of cash, and then they issue more shares. And if you extrapolate that over 20 years, you end up with about 50 billion trillion. Sounds like the US deficit, doesn't it? Shares on issue. And that's why when we have big volume days, we trade 100 million shares. So that's what happens. There's a lot of paper out there. But it certainly looks the goods to me. No complaints. FRP. I'm from Perth, everybody. I've been in the industry for a very long time. I know how these things work. Let's go to... how are we going here? We'll get to these online requests very soon, I promise. GQG is not in that list, so I have to go here. GQG. As a turnaround play, yes, look, I guess it's closer in that we're above the long-term uptrend ribbon. Yes, the long-term uptrend ribbon, long-term trend ribbon, I should say, has turned green, so it's an uptrend. Yes. Short-term trend, yes. Price action, yes. Impeccable price action. Candles are sketchy, though, as in we're still getting the frequent supply-side candle, upward pointing shadow, black body. It's a little bit weird, okay? But that's kind of a weird thing. There's not a lot of script here, I don't think. It's just a bit illiquid. These things can happen. So yes, this is a closer one to some of the other ones we've seen, but I still want to see sort of a meaningful little dink towards the long-term uptrend ribbon, prove to me that it is now acting as dynamic demand, because it has a history here of acting as dynamic supply. So show me it's acting as dynamic demand, and then I could have a look at it on a nice white candle. But we're still, I think, a little bit of a ways away from that, but closer than some of the others. MRL, I must admit, is one I haven't seen before, and I can see it will not meet my liquidity filter. In fact, you can see here, right there. So that's, if you're unsure, I probably should have pointed this out before, but if you're unsure whether it's meeting the liquidity filter, you can see their turnover filter, so minimum turnover, it's volume times the number of shares traded. On average, over the last month, needs to be, don't quote me, but it's a very low bar. It's only like a couple $100,000 on average per day over that month. So it hasn't met it, and that's why I haven't seen it. But it doesn't mean it's not a good stock or a good opportunity. You do the work, and the work suggests with those trends it is certainly available for trade entry. Today's candle doesn't warrant it. Obviously, it's pulled back. Maybe the question, therefore, from Alan is, I'm a bit panicking here, Carl. Pretty decent reversal today. What do I do? Is that a species-ending event? It's not a good candle, given that you closed here, right? So we can kind of fill this bit in black, or you can blend those two candles together. Either way, you'll end up with the same candle blended, and that is a candle that sort of starts here, right? Has a high here and a close down here. Okay, so open, high, close, low, I should add, and therefore it's a long upward pointing shadow with a small black body, which is feeling a little bit like an exhaustion move. Okay, so it feels like that. That's almost exactly what the blended candle looks like. That's another white black there. Okay, so I would not give it much more room, just given the liquidity, even if it's just a third, just as a precaution, shot across the bow, that's all, and just do it. The worst case, if you gave it another day and just see if it confirms the supply that's come in. Okay, bit of volume today as well. Okay, so a few of the shareholders meant it. So let's go minus a third, just as a precautionary measure. No more than that, I don't think. That's my opinion. You do what you have to do, and then we're looking for confirmation to decide what we do. And hopefully the next bit of confirmation is demand side in nature, and we're actually adding that risk back in. That's all. If I don't have it, then no, I'm not adding on the basis of the last candle, because for everything, for all the reasons I've explained, it is concerning. Let's go to Tabcorp for Adrian. I promise there's only one after this, and then we'll do online requests, zooming back to normal, very important. I've realised I've done all my drawing tonight in this window. In this window here, this one here, which is my market index window, where I do my charts of market index. I'm not allowed to draw in here. That's really bad. Everything I've drawn tonight, I will have to look in the recording and delete and try and draw it in this window, where I'm allowed to draw as much as I want. Oops. Oh, you can see I was there at Fiducian, and for some reason I ended up somewhere else. Sorry, we're doing Tabcorp. This was one that I think was looking really good for a turnaround play. It just lost its way a little bit, unfortunately, in what has been a pretty good market. So that's disappointing too. Look, what it does have going for it, if you did stick with it, as a result of it being in, I think here I put it in, I think that's all. I don't think I ran it any more than that. So look, you're probably breaking even actually, and that's fine, because we've got a really good area here where we're seeing demand come into the market. And don't forget, my trend ribbons don't exist. They're fictitious. I made them up. But quite often they do just work like freaking clockwork in defining areas of dynamic, imaginary. Every time I say dynamic, everybody, just insert the word imaginary. So they're really good at defining areas of imaginary supply and imaginary demand. So that's okay. If we get under here, then all of that imaginary demand has gone poof, and you wouldn't want to be in it, in my opinion. Let's go MP1, which is a super fascinating chart. Came up in tonight's scan, and I spent a good, I reckon, 20 seconds considering it. Actually, I'll leave the lines on there, because last time somebody asked about it, I said, look, it's a little bit too early. I want to see a dink. I want to see the dink in the long-term trend ribbon. I want to see that long-term trend ribbon prove to me that it's acting as imaginary demand. And a nice white candle out of that trend ribbon would suffice. What have we got? Look, it's almost prophetically where I've drawn those arrows. I'm going to remove them now because I want to see the candles underneath. Because look, we did get three pretty dodgy candles in there, didn't we? Not very decisive. Today's candle, I think, is quite good, but didn't close as high as I would like. And it does make me feel that there is some latent supply just lurking in the system around here. But no, I'm pretty close on this one. Don't forget that's the next supply zone there. And as far as turnaround setups go, we do want to try and find the strongest one. So we will compare this against some of the other turnaround setups that are out there. But I think next high close, and it does need to be a solid close. So I'll draw the candle that I want to see for you in here. And it won't look red and filled red. It'll be black and filled white. And it will close at the high. I really want to see a nice close on the high, maybe a little bit of elevated volume, certainly above average would be good to tell me that I have finally dealt with that pesky supply, that imaginary supply that's continued lurking in and around that area. But seeing that candle there, then that would allow me to take a third of a position on a turnaround setup. That is MP1, and considering that, I called it a short there, I think that's a nice little bookend on this one. Let us now turn over to this side of the room where you've all been waiting very, very patiently. Please don't put any more in, obviously getting close to an hour in now, and we'll just deal with the ones we've got, if that's okay with you. Perry, with his US stocks, is the last one, last group of stocks we'll do tonight. Avant saying hello, everyone. Hello, Avant. Carl, can you please look at PBH? I certainly can. And I'll look at FND and MP1. Actually, we've done very good. Okay, Pointsbet is looking good in that. What has it done, everybody? It has bounced off the imaginary demand zone, hasn't it? Which is incredible. Why there? Like, it's not really static. Like, it doesn't make any sense from any textbook style of technical analysis. It's nonsensical. Why there? Hey, Carl, how did you come up with them? I did a lot of back testing. I did a lot of looking at charts over many, many years, over decades. And I used a lot of different moving average combinations. And I settled on these. And coincidentally, they're all Fibonacci numbers, okay? And I think Fibonacci, I thought he was a wonderful, wonderful man and great mathematician, but I think Fibonacci in markets is a great steaming pile of bullshit. I really, really do. But there are a lot of people that really believe in it, okay? A lot of money that moves in the markets because of Fibonacci. And possibly that's why my trend ribbons work so well, because that's where they're trading. So I don't care why they work. I just care that they do work. Anyway, so the imaginary trend ribbon, imaginary demand zone worked, and we're heading back up. So this is good. This is good stuff. And the candles since then are really good. And we're above the short-term trend ribbon now. I think there's lots of good stuff happening here. But you know what I'm going to say next. I want to see the dink. Let me see any sort of pullback here, and then a nice hold, a nice white candle, nice lower shadow, and then I can start to entertain it as a turnaround play. I still think we're 2-3 candles away from that happening. I could be wrong, and it could just go up in a straight line. I don't know, but that's what I prefer to see. What it does also is that, if I'm going to get in sort of around here, if I just bought it today, I've got all this quite a big gap, I think, between me and where I'm starting to get out, my comfort zone, my demand point, right? If I get another demand point put up here, then, I can start to exit a bit earlier, if you get what I mean. So, yeah, it's always nice to have that extra higher demand point, the dink. I've got to come up with a better phrase, because if I told somebody that didn't know what I was talking about, I'm waiting for a dink, they would have, what are you talking about? No idea. FND, okay, look, I can see, again, very similar in that we are, trying to move back up off the imaginary demand zone. Let me delete some of these that I think feel they're a bit old. This candle's impressive here. This is my favourite candle. Actually, this is my favourite candle. They're both my favourite candle. This is all three of those are my favourite candle. Look, I think there's a great deal of demand coming back into the system for this one. So yeah, I'm pretty happy with this. Look, one more candle. Do I need another candle? It's a turnaround play. I'm overthinking it, because what's the worst that could happen? I could get it wrong, and it could go down, but it wouldn't have to go down very far for me to know I'm wrong. There I'd know I'm wrong, and down here I'd be pretty sure I'm wrong, and down here there'd be no question that I was wrong. You get what I'm saying? Yeah, I'm happy with it. Plus 1/3 FND turnaround play. Let's go to we've done the MP1 and Avant correctly noting, quoting him here, I'm not too sure about MP1 as a turnaround. Is it too early? Well, I think we know now it's very close. Adonna's saying, hi Cole, thoughts on CBA and Zero? Well, how bad were banks today? We've had obviously Bendigo dropping, I think, 15% or something. Westpac down 4 or 5%, and yet, Commonwealth Bank still looked pretty solid here with a substantial downward pointing shadow. There was plenty of demand in the system for Commonwealth Bank today, so in line with everything else, I can't see any reason. I can't see a single reason. Is this candle, it's a rhetorical question here, you don't have to answer, but is this candle here, within the context of everything we've seen tonight, a species-ending event? blend it with this candle. Is it a species ending event? No, it's not. So if it's not, then what do we do with it? We do nothing. We stay the course, and we are full risk position on CBA. So I think I'm running at 42 features, and no doubt at some stage in the not too distant future, I'm expecting I will get a 43rd feature out of it. FRP not 1/3 today, even though today's candle actually is extremely strong because of that black one. I think I want to see a white one before I add risk to it. Zero, which still looks good. Donis, nothing to do there. It's a little bit, it's gone a little bit quiet, hasn't it? But otherwise, no, it's still very, very strong. There's nothing in there in the candles that suggests we need to do anything but hold on. Maybe it's sort of just steeling itself, Adonis, for the next push into 200, isn't it? Because you've got to think that 200 is just playing on, the market's mind now. The demand side, they're thinking it's going to get to 200. Supply side's thinking, I don't want to sell till it gets to 200. Sometimes these things are self-fulfilling. No, I'm very happy with that one. We'll do your US ones on the way back up. Peter's going to ask about the US dollar index. Let's have a quick look at that. We will depart from Amy Broker, and I will remember I promised to come back to Amy Broker. Let's go to Futures Forex and scroll down to the US dollar index. Which it's broken down, hasn't it? And I think a shallow pullback, order of magnitude, into the imaginary demand zone, as we're now calling it, would not be a surprise at all. But certainly candles, certainly price action. There's a lot of black candles there. There's a bit of supply, and you can just see night and day, can't you? I mean, if you weren't looking at candlesticks, God knows why. What were there before? What were you doing before candlesticks, ladies and gentlemen? Do you even remember? But look how many white candles you got, and then all of a sudden they're just all black. The market's changed. Would I go short? I could take some sneaky, cheeky shorts, but what's the point? I mean, if this is your downside, what's the point? I think you just know it's going to happen, and that might shape some of your other trades. For example, buying this. Is this an aggressive setup? Look, potentially, is this a base? No, not really. No, I don't think so. I think it's just a rally in a bear market, isn't it? And we'll see it. I just booked a bunch of holiday stuff apps. Wait a second. I'm not going to the US though. What's this one doing? That's euro going down, isn't it? So I probably could have got some better deals on that stuff. And I screwed myself. I'll be away from the end of June to the end of July, ladies and gentlemen. I'm going to be in Europe, as you might have told. So we will pause webinars for a month then. But anyway, we digress. Let us head back to Carl. Can I get your thoughts on PME? Certainly can. Let's go back here and go here and here. I asked ChatGPT to plan my itinerary through Paris, and I gave it a bunch of places I want to go to. I've been to Paris many times, but I want to show the kids the usual suspects of sightseeing, and it's amazing. I said, I want to start here. This is my hotel. Give me walk times. Give me times to stay, the fastest routes, and it just gives me this spreadsheet of an itinerary. It's the most amazing thing. How good is AI? Pro Medicus, which is very much at the forefront of AI technology, isn't it, with their products? I still think looks very good. And this is a bit of a theme tonight, isn't it? Because we have seen some of these great trends come under threat from the supply side, and some have crumbled, and some have remained resilient. I think this is one that is on the more resilient side. This is not a great candle. I mean, pushing up to 300. Look at that, 300, ladies and gentlemen. If you're long Pro Medicus, I suggest that, you had some work to do at 300. I wonder if you did. Did you do it? I'm sure some of you are long Pro Medicus. Did you knock a third at 300? Because I'm telling you now, that is your job. As somebody who follows me and my system, that's your job to do that sort of stuff. Just have an order in the system at 297, 1% beneath the round number. Why not? What was the high on that day? 298. There you go. And you just look so clever, don't you? But it's not. It's just the fact it's a big bloody round number and a bunch of people like you want to sell there. But this candle here is very reassuring. This candle here probably shouldn't have come back into that range but I still think we're okay. Look, again, what a wonderful thing candles are, and they're downward pointing shadows, because that's where the demand came in. And if we're trading beneath there, then I would rethink my strategy, and I would certainly, for me, look to exit another third there. And I think because of the pedigree of this one, I really like the idea of just hanging on to that final third and seeing where it goes. What is this? Oh, this is the alarm. Yes, no, I know I've told everybody to stop typing in new ones. Let's go to A2 Milk. I think we did, didn't we? We did. A big plus 1/3. It was on the other screen, so it's not labelled. And Audinate. Oh, God, I don't want to look at Audinate. Disappointing for me, because, you know, I did derive a great deal of pleasure in calling this one down, and it was a feature chart for many times, and I reckon I started putting it in here, and go check, but here and here and here, and, you know, look, a brilliant call, a brilliant call on what was just the most darling stocks. I cannot tell you how much pleasure I get out of calling these turns, and you've got my system, you know what I'm looking for, but calling these turns in the most favoured fund manager love fest stocks, you know, the game, there's a game changer, this stock, it's, you know, it's leading its industry, it's blah, 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 mate, the corner has been turned. I derive great pleasure in that, and it does pain me a little bit to see it pop up for no good reason, but hey, you know, if you were short, you would have been exiting certainly days before this, and would have probably exited your final third today. Doesn't mean it's a buy. Look, what Audinate has got going for it is a decent base pattern, to be fair. What it doesn't have as much as what I would like, I was going to say sort of those big volume volatility events. Actually, you know, that is impressive. Smaller one there, but probably needed a little bit more. Look, I think it's something we could look at down the track. It's still, I think, too early. It's aggressive. It can't be aggressive now because it's already interacting with the long-term downtrend ribbon. So the aggressive one's finished. The aggressive one is where you can try and get in before the long-term trend ribbon, and using the long-term trend ribbon potentially is even a place to start to take initial profits even, or take a little bit off the table. So it's there. So, you know, it's a turnaround play, which means, sorry, I should say now it's a prospective turnaround play, which means we have other rules which are not being met. So let's keep moving. Let's go to, that's Sue. For those three. EVN from Ian. Yeah, well, I was going to say gold got hit today. You know what? That got hit today, but didn't really get hit, did it, Ian? You know how to read candles just as well as me. You know that candle is not, you know, like on the face of it, you tuned in, you looked at your portfolio today, and you saw EVN was down, and you go, darn. And then you checked out the candlestick chart, and you said, actually, that's fine. That's okay. That's nothing to worry about. Let's keep going on BSL, which definitely was in the list today. Look at this. I must have said some bad things about BSL in the recent past, because look at this zigzag, and I probably said something along the lines of, yeah, maybe it's starting to look a bit better, but God, why would you trade this agonisingly horrendous trading range? And then look what it does. But hey, that's the market, and it's blasted through, and you can't ignore it now. Look where I've drawn. You know, I've drawn these supply zones, and for all the same reasons we talked about at the very start of this presentation, is through that supply zone. That latent supply is now demand. So I'm on board with this one now, albeit a little bit late, but not late. That's probably not the right word. Later. And so it is a feature chart you can see there in my list for tomorrow. Yep. You know I love to buy big white candles. You know I love gaps. And you've also seen, don't worry about what I love, you've also seen that it works too, haven't you? Not all the time, but for the most part it works. And it is the opposite of what most mum and dad investors are thinking. Most mum and dad investors look at that chart going, I can't buy that now. That's too high. That's gone up too much. If I buy it now, it's going to go down. What they're forgetting is that it is a picture of excess demand. Every freaking person wants to buy this thing, and guess what? Nobody wanted to sell it. Why? All the people who didn't sell it, they think it's going higher, and all the people who want to buy it, they think it's going higher as well. Let us keep going to CSL. Yeah, look, CSL, again, another... I love CSL because it is, if you look at the broker consensus on this, it was... I think there were like 9 or 10 brokers, and all but one had a buy, and the one that wasn't a buy was a sector perform. So again, I get so much pleasure out of calling these things down when everybody in the broking community is long. And I still think it's down. Look, today's a decent candle, don't get me wrong. There is some demand that came in today, but it's small compared to, you know, like score out of 10, like it's a 1 out of 10 to go long, isn't it? Which means it's still a 9 out of 10 to go short. So I can't be buying that. But if you're short, I think you can stay short. You're looking at today's candle and you just see how the confirmation turns out. Even if it pushes a little higher towards the short-term uptrend ribbon, I wouldn't panic too much about that. I still think the supply side is very much in control, both in the short and the long term on this chart. Ian's got SUL, which is looking good. I'm pretty sure I ran it maybe here. In fact, I must have run it there because it meets all my criteria. And it looks fine today. Look, it had actually a pretty good day today in a bit of a down market. We saw at the start the consumer discretionary sector is going gangbusters, so no reason why this can't continue to go up. Keep an eye out, not just for you, Ian, but for everybody else listening. We're in the middle of earnings season, aren't we? So at some stage in the very, very near future, we're going to have probably half-yearly report for this company. It has a long and very reliable history, Ian, of disappointing the market with its results. So keep that in mind as well, whether you want to take a third off the table the day before the result. You can always add it back afterwards, even if it's high, that's fine. Or maybe a half. Look, don't know. There's no sensible way to play results because it's a crapshoot. It's just a game of luck, isn't it? So how can you navigate a game of luck, I guess. Let's go to Perry's got MAF, which I think is brilliant. Perry, it's been feature after feature after feature for the last few weeks, and it has, if I'm not mistaken, you can see it should be a feature today. I must have missed a couple here, and I know I've run it day after day, but it really should be a feature. It was definitely in the, let me prove it to you, it was definitely in the shortlist. And yeah, it's definitely the shortlist. Look, don't know. I can't explain it. But it is very good. Don't get me wrong. If it's in the shortlist, it's still plus 1/3. And maybe I just went for some other things that haven't been in the shortlist more recently. This one's had plenty of a go. But certainly FRP plus 1/3 on that one. Yes, perfect. The perfect chart. It's screen. Thank you. Screen was blank. The perfect chart on that one. I think we know why. Okay, how are we going here? On INOS, I think that means DVP is still okay. We talked about it last week. We called it a turnaround play. We talked about white candles. We talked about rising peaks and troughs, as I can see. We also talked about big supply zones, of which we are smack bang in the middle of one, and we're also at $3. Now, I don't think this is a $3 take some off the table sort of level, because it's not a surprise. We've been here many times before. But it is a $3 supply zone, and if we see further confirmation, act very quickly to get some risk off the table sort of level. Okay, but today's the first shot across the bow. I don't want to see it confirmed by a similar candle tomorrow. I'd happily reduce a third, but that's all. That's like max, and even then, you may be being a bit of a nervous Nelly. It's still okay. Okay, but just to free up some cash if you had to look elsewhere, and certainly hanging on to the bulk of the risk on that one. Let's go to KPG, Kelly Partners Group. Amazing. I'm not going to get this wrong because I'm certain it is in the feature charts for tomorrow. Looks amazing. No complaints. 10 out of 10 FRP and plus 1/3 for obvious reasons. I don't know where it's going next. Wouldn't have a clue. Is $15 a round number? No, it's, who cares about 15? Nobody's going, please God, let it go to 15. So that one's very good. One of the worst looking charts with lots of black candles, but it keeps going up. Oh yeah, look, I don't think it's the worst looking chart because it's going up, but I agree, it is a mystery. It's a mystery. It's a conundrum, isn't it? Yes, and this happens in illiquid stocks where there are fund managers for whatever reason. There's one fund is selling and two funds are buying, sort of thing. And that. On Tuesday, the selling fund kind of has their way, and then on Wednesday, Thursday, the two buying funds have their way. And when the market is illiquid like this, you can get that sort of chart, and it still goes up. So, yep. Preferably, we want white candles. Absolutely, totally agree. When you can find them, that's the way you would go if you have to choose between two of the same. Everything else. We talked about FID for you, Hoozle. So, yes, I definitely like that one. ALC. This is a very nice turnaround play. I can't recall it coming up because you can see the minimum turnover filter here. Slightly different name, but doing the same thing. It means it hasn't been I haven't seen it in my scans. But if I had seen it in my scan, I know Hussle's all over it, that's where you would be buying. Hussle, I'm sure that's where you added a third. I reckon you added a third there, you added a third there, you added a third there. Ethan, you can keep going. There's no reason why you have to stop. And, it's taking, is it taking this out? It's looking at that, isn't it? It's not taking it out, but it is looking at that today. And I still think it did pretty well today, all things considered. Like, that's a pretty serious point of supply, and all we saw was that little upper shadow. So I'm still very happy with that. Nothing too sinister going on there. We'll monitor it at that level, watching candles, watching price action, but I don't think there's anything we need to do there apart from FRP. Probably not adding risk on tonight's candle just because of that upper shadow, but everything else looks very, very strong indeed. RZI, which is Raiz, again, you can see here minimum turnover filter is 0, so that's why it's not coming up in the scans, but you all know it's exactly what I want to see in a chart. A bit of a cluster here, isn't it? I don't like when you have this many black candles and so little damage done. I think we're okay. What levels can we peg though? And there aren't really many, because none of this is a trough through here. None of this is a trough, and the last areas of supply, which could then act as demander through here, but we'll be interacting with the short-term uptrend ribbon in the meantime. I think just stick it out. If the candles do get big and nasty, you can do something about it. But I personally look at that and I'm not too worried about it just yet. Okay, I think this is more influential than those candles is the fact that this is so close to that number that maybe there's still some unfinished business up there. But the next candle and the next candle and the next candle will tell more of a story. Corporate travel management was looking very good for a turnaround play. I'm pretty sure I ran it there. I don't know if I ran it there. I can't recall. It has slowed down. A little bit disappointing, but not a write-off by any stretch of the imagination. Why won't you stop the alarm? So happy to continue to work with it. I don't want to see it close beneath there, beneath the short-term trend ribbon. We're looking at maybe points that we can peg for -1/3 beneath the long-term trend ribbon. Okay, but I think it's okay in the meantime. I know it's going to be frustrating to watch everything else, Robert, go up. All the ones you didn't do, they're all going gangbusters, and you took corporate travel. I know the feeling. G&G, still okay. Yeah, still look very, very strong. I know we FRP'd it last time. We're going to FRP it this time. There's no reason to do anything else. Not adding risk on that last candle because there's no reason to do so, but very strong. But yeah, certainly happy to FRP and add risk on that IMD candle because that is the perfect example of excess demand all round. Candles, price action, trends, very good. I don't think there's anything on the weekly chart that we need to be concerned about. Well, there is a little bit on the weekly chart that we just want to keep an eye on, and that's up there towards sort of 320, 315, but we've got a ways to go until then, so I don't think we need to worry about it just yet. And we are going to start doing some, I was going to say US stocks, but I do have a few more here. Sigma still looks very good, definitely on the short list tonight. Didn't make the feature list just because that upper shadow, and that's, we saw MAF didn't make it, and sometimes I'm just really pedantic in terms of, unless you close smack bang on the high, I've got 20 or 24 charts that I have to then upload one by one into Market Index. So sometimes I do cull out some good stuff just to limit it to about 20 charts, and there's 20 charts going in tomorrow's list. So this one didn't make the feature chart, but unequivocally it's still FRP. And I have no qualms going +1/3 on it, but certainly hanging on to all of our risk on that one. Hopefully that's doing very well for you. Paradigm's given us, look, it looked good there, and then it pulled back a bit, but it is starting to come good again. And this does show, even if you got out of 2/3 there and you kept a third, you don't feel so bad about it, and you added a third back in there. We were FRP last week. We're going to be FRP and +1/3 this week. So let me just copy and paste that over. Even that black candle, I think I said FRP, just on the basis that, it wasn't all that bad. Don't quote me because I can't remember what I said. Now I'm looking at it and going, it's not that good either. But +1/3 on today's candle, adding risk on a turnaround play, which I think looks pretty good. This will be our, that's kind of the first crack at that supply, and then that's had another crack at it. We're having another crack at it. Each time we hit that supply zone, we weaken it that little bit more. Cochlear, COH. As a short trade or as a long trade, not a buy, so I'm going to keep moving here. It's more of a short on the next dink for a down, so I'm not going to spend any time on that, Robert, for a long because it doesn't meet my criteria. Very easy. And Zip, is that long? No, it doesn't meet my criteria either. I've got a short-term downtrend. I've got an indeterminate long-term trend. The price action is lower peaks, lower troughs, and predominance of black candles still. So no. If it progresses and changes, those things change, and I could look at it. But until then, I would not waste a heartbeat of time on these because there's so many other great trades out there, great trade setups that do meet the criteria. For example, like San has suggested, BSL, which we've already discussed. Zip, I'm not sure where you got that one. Yes, there's an update today, but there's still plenty of work to do. We'll do US ones in a second. CHN is another one we're disappointed about because it was on the short list for so many days. And again, it's too early for an aggressive setup. Well, not too early for an aggressive setup because, you know, the aggressives are getting in before the long-term trend changes from pink, potentially. But because we're interacting with it, it's too early for a turnaround setup. So a few people are asking me about these things. You know, time's limited in these sessions. Why ask me about them if you know what I'm going to say? Get what I mean? Like, you can do that analysis too. At least wait until the trend reversers turn orange, and certainly tell me why you're suggesting it. Don't just put in Michael. I'm telling you off here, mate. Don't just put in CHN. Like, why? Like, CHN what? What do you mean? Why are you wasting my time with this? If you're asking about it for a short, you're closer. You know, so don't. It's not just Michael, but there's a few tonight. I think we're wasting a lot of time by me saying, well, it's not a turnaround setup yet. Let's stop doing that. Wait until they are, and then ask me the question. You know the rules, everybody. Let's go. Lots of thumbs ups there. Perry's got US stocks, and we're going to do US stocks. Switzer's favourite stock is Ordinate. Every dog does have its day, indeed, Adonis. Okay, we're doing US stocks now, heading over to Chrome. And no, I don't think it's an aggressive yet because I like long base patterns. I like volume events, and I don't think so. We've got an upper shadow, like there's an upper shadow on today's candle. For me, I look at that and hey, you might be right. In 6 weeks' time, it could be 240. But the way my eyes see that is buying that now is just gambling. It's just like black and red at the casino. It's because why? If you believe that all the other stuff I've shown you works, why are you mucking around with this stuff still? Why not just stick to that stuff? If you don't believe the other stuff works and you want to punt on these turnarounds or the aggressives, then do that too. But just don't bring it up in the session. Now, why is this? This has disappeared. Let me try and find it back. It's gone. Yep, there it is. Okay, so we're going to do these US stocks and we're going to head back up. IoT is the first one. Samsara in the. What a great looking chart. Don't mess around with Mr. In Between. I think there's a song about that. And when you can buy something like this, and again, just like I don't know where CHN is going, I don't know where IoT is going next, but I feel that this is a greater indication of excess demand, of demand side control than the other one. So for that reason, I love this one. I'm going to go FRP if you've got it, if you're lucky enough to have it, that is, and plus 1/3 if you don't. And when it lets go of the drawing tool, we will check out the all-important weekly chart to see if there's anything out there to worry about, and there certainly isn't. So that makes me feel even better about that thing. IoT looks great. Thank you, Perry. Of course, Perry's giving me something. That looks that good. Let's go to CHEF, which is the Chef's Warehouse. Looks even better than the other one. Some people might say, oh, Carl, I missed it. It's gone up too much. I say, look, it's a picture of excess demand. If it makes you feel better, you know, you can try and wait for a dink. You can, you know, go for the other one that was closer to the light green zone. You know, it's not the end of the world. But at some stage, you still need to push yourself a little bit, get out of your comfort zone, and buy things that are a picture of excess demand, because the market is not worried about the same things you're worried about. If the market was worried about getting into this thing, it wouldn't look like that. So there is, you know, there's some psychology at work here. There's still, oh, Carl, you know, I won't buy pineapples because they're $6 each at Woolworths. I'll wait till they come down to $2.50. We're not dealing in pineapples here. The normal rules of demand and supply that work at the supermarket are not working here. We sometimes need to think in the opposite fashion. Plus 1/3 on that one, and we'll click save over there, and I'm pretty sure I saved IoT, but let me double check that that's the case. Let's go to Perry's third one, which is LYV, which, as you can see, I'm now typing as text and not as the next code, LYV. Live Nation Entertainment looks very good. Also, going to have a quick look at the corner of my eye. I'm sorry if I'm rushing, but I am, because we all want to get out of here as quickly as possible. There's nothing in that weekly chart that worries me at all. If anything, the weekly chart makes me feel even better about it. That's the monthly chart, makes me feel even better about it again. So it's all very good. So let's cut to the chase, shall we, and go FRP plus 1/3. I think in my defence, we have covered so much ground tonight, haven't we? I think we've done some good stuff, and probably a video that some of you will watch a few times over as well. TDS, Telephone and Data Systems, also there in the US. Another one, I can almost just write FRP plus 1/3 on all of Perry's, can't I? FRP plus 1/3, because they are pretty damned brilliant. Let us, for completeness, have a quick look out there, and there's nothing there that's worrying me as well. If it's on the left of that weekly chart, it doesn't exist. Don't worry about it. It's irrelevant. And let me just make sure LYV in my rush was also saved for next time. Moving up the list, we're going to go to Sands Baba Alibaba, which of course is the Chinese internet commerce site. Looks amazing. We saw Chinese stocks starting to turn up. That's a good sign. We saw some good retail sales data actually not that long ago. The last we actually looked at it not that long ago. I reckon we looked at it last week, and I said next high close plus 1/3. Probably that candle, and that was very clever of me, because then you would have got in maybe on that candle, and so far you're doing pretty well. If that's you, I don't think there's anything in that chart which suggests to me that you need to do anything but continue to hold. Is there anything in the weekly chart that I need to be worried about? There is a little zone there. I mean, I think that will be a minor pressure point around about 138.50. I think this will be a bigger pressure point here around 182, but I don't think we're worried about 182 just yet. So look, I'm okay with it. That is with just continuing to hang on here. That candle, I think, could be a bit better. Certainly compared to some of the stocks we've seen up to this point in terms of adding new risk to it, but I can't see any reason why we wouldn't continue to be FRP on this one at this stage. Let us go to your next one there, Sam, which is Cisco Systems, which you talked about as a short last week from memory. No, not a short. No, definitely not a short. I think Microsoft was the one we talked about as a short. FRP next high close, which, I don't know, was it that candle there? 12th of Feb. 10th of Feb, 7th of Feb, so we would have looked at it on the 10th of Feb. Yeah, so technically that's your next high close. So there's your entry, got a little bit of a pop, and doing fine. I'm not worried about that black candle. The candle that follows it, I think, is more than okay. I don't think we need to add risk until we can deal with the supply that's up and around that level, but certainly happy to run FRP at this stage. So what you had there, I think you're happy to stick with that for now. And I think the next trade potentially is more likely to be an add than to be a reduce. Applovin is the next one. As you can see, I'm typing it there. Let's go here, which continues to look good. We're FRP last time. So what a breath of fresh air, isn't it, when we come over to the US after I've been bashing away at Fiducian and its illiquidity and KPG with all of its black candles but still going up and all of those turnaround plays that aren't turnaround plays, and we come in, we're just getting just easy wins here. FRP, click save on that one on Applovin. Moving up the list here, Michael did say it. Thank you for confirming there, Michael. If I missed it, I apologise. Aggressive entry, you said about something, but I can't tell. But let's assume it was attached to the one that I told you off about. Let's go to 75 cents is still 50%. It's a great case study, Carl. So talking about, talking about the can't remember the one we said that is going to $1 now. Oh, it's Metals X, MLX. And we're going to keep moving up the list to Peter, who's got MTLS. Materialise. Oh, I'm curious. Nice looking chart. Let's have a quick look out here. More of a turnaround play, isn't it? I think we've got, again, pressure point here at sort of 17 and then another one coming in around 22. Is there one here? Potentially. Look, it's confirmed by this point here. There's a trough there and a high there. So a bit of a zone sort of between, say, 1290 and 1160. Let's see what that looks like on the daily chart. So 1160, 1290. Look, I think that's miles away. That's fine. Not too fussed about it. What have I got? Double greens, strong trends. Trends acting as dynamic demand. Price action is good. You know, that trough coming in at or above that second from last peak. So big tick there. Predominance of white candles and some decent white bodies amongst them. So I can't fault this. There's no reason, after doing the analysis, why we wouldn't continue to run a full risk position on this one. And it is really that simple, ladies and gentlemen. Just going through that checklist. And not overcomplicating it, and just narrowing the list down to your short list of trades you want to do today within your broader risk management model. Let's go to the next one here for Peter, which is ITRN. Just typing it in, ITRN. Yep, no problems here either. Let me check the weekly chart for you. All good there. Feeling even better about it. Nice big base pattern breaking out from that base pattern now. This upper shadow would not have me adding risk tonight. I'm just waiting for the next high close. But otherwise, if I did have it, certainly FRP and next high close for the plus 1/3. But everything else checking out very well there. Okay, moving up the list again to the next US stock I can find, which might not be found. I think we're here. I know, Adonis, you had some US ones there. BA, Boeing, there we go. Type that and do that. BA. Boeing Company, we were talking about as a turnaround play last week, Adonis. I think you asked me about this one. I said yes, looks very interesting. Let's see some more white candles coming in, confirming short-term trend ribbon as demand. I think we've got that, so I'm pretty happy with this candle here. I think this is the one that makes the setup. There hasn't been much follow through since then, but not a deal breaker for me. I'm quite happy to have risk on this one. If there is one criticism, it's just the price action that we would prefer it to be. And I know I've got a tool here that's a continuous draw. Maybe it's in here. I can do Elliott Waves, fat lot of good. That will do me. And somebody's shouting. I know you're all shouting at your screen. The continuous drawing tool, Carl, is somewhere in here, the zigzag. Adonis, all I was going to draw is the good price action, not so good price action. And I think you're an expert on that already. So there's the path. There we go. So good price action. Look, I think that's what we would rather see. I think it's just a little bit overlapping. So it's not a no. It's just to make sure that you are confident you've got the best turnaround setup you can find. That's all. Minor criticism. Let's do your final one, and our final one for tonight is Amgen. And I fulfilled my promise of getting to everybody's list. Yes, it's a turnaround play. Yes, we're at the amber long-term trend ribbon. Yes, it is amber in itself. Short-term trend is up. I still think there's lots of work to do though. If you're on it, I'd be just, a little bit mindful. I don't want to see it close beneath. Or maybe just give it to, look, you could do a third there, sort of a 287.15, a close beneath, and then a third there. And I don't think you really want to be in it after that because it's probably failing at the long-term trend ribbon. That's if you're in it. If you're not in it, then I still think there's a lot of work to do. Let's see another rising peak through here. Let's see a nice white candle, and then it's going to start to look more like a turnaround play. Okay, but probably still needs a bit more cooking on that one. Okay, let us wrap up tonight by reminding you that everything we've discussed is general in nature, has not taken into account your personal financial circumstances or particular needs. Before you act upon any of this information, consider it carefully, or seek the help of a financial professional. You could lose money trading and investing. We've seen some great case studies tonight where that happened. But in all of the case studies we looked at tonight, ladies and gentlemen, we found a path out of it. We found an action plan. And I think that is the critical piece of the puzzle that we can all take heart in that we have here is we're never sitting there looking at a candle wondering, well, what the hell do I do now? You know, we've got, you know, a hard and fast set of rules to guide us through the market. So it's been a pleasure chatting with you this evening. Hopefully you got lots out of it. I certainly enjoyed chatting with you. All the best if you're trading and investing until we catch up again. Bye-bye for now.